Time of day again. Hello. Welcome back for another quick video where I talk about things. And in today's video, talking about the old crypto market. We're looking at it's Tuesday, yeah? It's Tuesday. Happy Tuesday. So more power to you. What happened yesterday when the markets came back? The traditional markets reopened, and literally in the run-up to the market open, we gave you the pre-game show live in the Alpha Trading live stream. And if you were there and you were listening, you would have heard of the old probabilities and targets that were distributed all over your listening ears, and which you would have seen with your own eyes if you've been looking. And what you would have noticed is that the targets once again hit exactly where we said they would probably hit, right? And I mean, practically to the penny. In fact, even more so, right? Those movements to the downside, at bottom of that weekly on Bitcoin, for example, I mean, spot on, right? Now, why does it happen that we are consistently nailing the targets and that we're giving you this information in the run-up to traditional market open? Right? Is that a coincidence, or are we just secretly running everything and we decide to pull the market one way or the other at any given time just so we can look good for you guys? And are we secretly controlling, millions of trades per second around the world just so that we can pull the wool over the 10 people that watch our videos, right? And the however 50 people in our tiny little Discord that are active, or 100 people, whatever the number is. It's very small. Definitely less than thousands of people. I haven't looked at the numbers yet, but it's not even thousands of people in there. So you think and it's free to join, so they're paying us nothing. Do you think we're giving you accurate probabilities that are constantly hitting on Bitcoin and Ethereum and Litecoin and Solana and DXY and Tesla and gold, and all these traditional assets people are buying and selling and holding? You think we're constantly giving you trading targets that are constantly hitting? And we're giving those targets to you ahead of time, far enough ahead of time for you to easily make the trades? And we're not telling you this is a signal. We're saying there are probabilities to the upside and the downside, and we're telling you what the probabilities are. Because if you know how to listen and watch, and if you know how to read and learn, then you'll know first standard deviation or first Laplace distribution, they're both 68.2%. The second standard deviation or the second Laplace distribution, they're both 95.5%. And meaning 95.5% probability that price will be contained within that second standard deviation or that second Laplace distribution, right? And then the third standard deviation or normal distribution or Laplace distribution, price will be contained 99.7%, right? There's a 99.7% probability price will be contained within that third standard deviation, which is also called normal distribution, or that Laplace distribution, the 99.7% Laplace distribution. Right? So if you know how to listen, when we tell you, it looks like the price action is going to go down to the second Laplace to the downside below the mean of the 4-hour time frame, or the 15-minute normal distribution, right? Third standard deviation of the downside is about to have a major outlier. There's a 99.7% probability that it's going to be contained by that. And if it isn't, then obviously it's a significant outlier, right? If it's breaking that probability. And if it is, well, it's expected because it's 99.7% probability, right, that it'll be contained by that. And then what would it do? It would either go sideways or reverse, right? Or it would continue on, right? Because it can do that. It can go sideways and then continue in that direction, especially if it's on a low time frame like a 15-minute, where that level of that, 15-minute third standard deviation to the downside will obviously change. And if it, and the new 15-minute candle will then give you a new first standard deviation, second standard deviation, and third standard deviation level, right? So, there's a reason these assets are constantly hitting these targets that we're looking at on any frame. It's because the bots that are controlling the markets, right, are moving literally millions of orders per second, okay? Like, when I say bots, I mean massive supercomputers, massive super interconnected supercomputers, okay? Like rows and rows of just racks after racks after racks full of servers connected to each other, running extremely powerful, high-end trading algorithms, which are basically a very not sophisticated version of machine learning, okay, which is like basically a dumb version of what people think AI is. It's not really AI at all. It's just machine learning, like a large language model. People think ChatGPT and Gemini are AI. They're really not. They get called that for commercialization reasons, because it's easier to attract users if you say the thing is AI and make people feel like they're using something more sophisticated than they actually are. But they're really just large language models, and large language models are really just machine learning, right? Large language models are in fact not even that large as language models. They're looking at, like ChatGPT is looking at a particular data set, which isn't even so big, right? Like, yeah, it's getting bigger over time, but at the moment, it's not such a massive language data set, right? It's a relatively small data set of information that it's actually evaluating. So why do I say that? Well, I say that because to tell you, the trading bots are really no different. They're just simple concepts. They just happen to be very sophisticated in how much they've been developed and all the features and functions that they've created and added on for these massive high frequency trading firms, which are nothing like the trading bots that you can buy for $50 or $100 or even $1,000 a month at some little software shop, or software site that's telling you, oh, trade using our bots, and you can, build automated rules and execute the bots instantaneously, and all that. They'll automatically execute your rules, and they'll, you can put your trading on automatic. I'm sorry, but that it doesn't work for most people. Okay, maybe it works for you, and if it does, congratulations. But if it does work for you, if it does work for you, first of all, you should know you're a statistical outlier. So yay for you. Number two, I bet you the reason you're a statistical outlier is because A, you have good risk management. And that means you know when to put risk on and when to take risk off the table, right? That's the vast majority of any trading strategy. And B, on top of having good risk management, it's kind of part of risk management, is I bet you don't just let those bots run idle or run when you're away from your keyboard. I bet you don't just let them run rampant when you're not looking at them, right? Like, if you're going to tell me, oh, I just put $100 on, and I went away and had lunch, and then I came back an hour later, and suddenly it was $200 in my account. I'm sorry, but I'm just not prone to believing that without significant evidence, right? And no making a video that just says, here's my like those commercials you see where these trading bots are promoted. And the reason I'm not prone to believing it is because for experimentation purposes, for research and development purposes, as a person who's been trading for many years, I have tried these things, many of them, right? Like with tiny amounts, just with real capital, just to see if they in fact work as advertised. And the answer is no, they do not work as advertised. First of all, many of them you can't actually program properly using VEPS indicators. Okay? Many of them use only rules from a fixed set of rules that they will accept from the traditional voodoo technical analysis using EMAs and SMAs and Fibonacci's and silly nonsense, right? That's no way to trade. Real bots don't sit there and draw Fibonacci's or randomly calculate some random Fibonacci thing. That's not a thing. Real bots are calculating means of returns and standard deviations of returns and entropy and variance, all kinds of things, correlations, right? They're looking at things that actually matter. And why doesn't SMA or EMA or Fibonacci or order box or, hand-drawn trend lines or random diagonal lines you put on your chart, why don't those things matter? Because first of all, they're all completely subjective. Right? Second of all, bots don't sit there and draw these things like real bots at HFT firms because they don't have time to draw those things, or they're running literally millions of orders per second. Third of all, those are random things to draw. And if you want to play Crayola with your trading, hey man, you've been fooled. You're the fool. If it's like the old expression, if you're playing poker and you look to the left and you look to the right and you don't know which one is the sucker, it's you. Right? So that is why the big HFT bots use the relevant maths and not the silly TA stuff that is shoved onto you by, ironically, the people who would never use it, right? The smart money that actually controls the vast majority of wealth in the world on the markets, they would never use Voodoo TA. In fact, if you went to their company and tried to get a job and your proof was that you know how to use traditional technical analysis, they would laugh and show you to the door and not give you the job that you want, right? If you want to be a trader for them, right? And you can say, well, but I studied at so-and-so, for learning how to trade. And they would say, that's nice. We only, first of all, you need to have a degree usually from a top business school. And you need to demonstrate that actually statistics and probabilities, right? And you need to know that you understand concepts, right? Like the ROI, right? And the ST-dev and normal distribution and Laplace distribution. You need to have these concepts in your belt if you want to actually be like a real trader at one of these top shops, right? Like you're never getting a job to trade for Citadel or BlackRock or anybody else that's a serious trading shop, not a second rate or third rate one, but a top one if you use EMA or your randomly drawn trend line or your gut feeling, right? Hey, hello. It's not happening. And you need to get the actual relevant maths under control, in the sense of you need to know them. You need to know inside of your big wet noodle in between your ears what's going on with the relevant maths. Because without that, you really don't have any way of being a consistently profitable trader, and no self-respecting real trading shop is ever going to invite you to risk their capital, certainly not for a long period of time, right? They might do it on a lark. They might be like, yeah, let's let you do this one trade, just for, shibs and giggles, to see if you happen to be right this one time. When you inevitably fail, they will laugh and say thank you, and say I told you so, but in different words, and then they will show you to the door, right? Because traditional TA tools are literally designed to fail the vast majority of the time. Well, if you knew that about any set of tools that you use, would you use those tools? Think about it. Would you use tools that you know are probably going to fail the vast majority of the time that you use them? Like, would you actually do that? If you would, it's honestly a little bit concerning, right? Because you shouldn't be. You shouldn't be using tools thinking it's going to do one thing, but knowing statistically it's probably going to do another. You should not be using those tools significantly, because you're putting money at risk. You're putting real money at risk. You're risking your real capital. That is not worth it. Right? If you follow the rules of Warren Buffett, the number one rule of trading, according to Warren Buffett, who's really an investor, not a trader, but for the purposes of the discussion, what is Warren Buffett's number one rule about investing? Don't lose money. And what is his number two rule about investing? See rule number one. Right? What does that tell you? Well, it should tell you that if your tools are going to fail on you 7 out of 10 times, 7 out of 10, that's a lot. It basically means they're failing all the time, because if you have to counter trade your tools 70% of the time, because they're going to fail 70% of the time, and on top of that, you don't know when it's going to fail and when it's going to succeed, it means you constantly until it's too late, because it's lagging information, which means the information it's giving you is completely unreliable, right? Completely unreliable. Was only saying long, and you'd be right half the time. B, you need to second guess it. You're going to be wrong most of the time if you're basing everything based on lagging information. So it's going to be not working. If you go with what it says, you're going to be wrong most of the time. If you go against what it says, you're probably going to fail a lot of those trades too, because you're going to think when you're in the trade, this worked. Okay, the entry worked. I'm in profit. Now I'm just going to stay in until it tells me to get out. Wrong. Why? Because it's going to be wrong when it tells you to get out. It's going to tell you that too late. You're going to miss the profit. Just like you would have missed the entry if you would have listened to it. You're going to miss the profit on the taking. What does that mean? That means you need to not listen to it and just trade basically on your own instincts if you're going to do anything, right? Or just not even instinct. Just pick a side, any side, doesn't matter, because markets, if you haven't noticed, are constantly going up and down and up and down and up and down. You might have noticed that, right? Hopefully you've noticed. Candles don't just go to the top forever. And they don't just go down forever either if they started really high for some reason. By the way, have you ever seen an asset that just starts really high for some reason? There's a pretty good chance it's going to go very low eventually. And it doesn't matter if it's crypto or a traditional asset. If an asset starts out with a high price, in my opinion, if it starts out with anything above zero, it already has some questions that have to be answered. In my opinion, generally, and I don't mean this to trash any particular asset, there's plenty of amazing stocks, there's plenty of amazing companies doing incredible things. I'm not saying this to trash any of them, nor am I saying this to suggest that they should do things differently with how they set their initial stock prices. I'm not. I'm just saying, in my opinion, the model that I think has demonstrated to have worked the best is when assets start at zero and ultimately let the market decide what the asset is actually worth from a starting point of zero. Now, why would I take such a crazy idea? Is it because of Bitcoin? Yes, actually, it is because of Bitcoin. I don't think that has to be demonstrated anymore. Bitcoin has been running now for more than 15 and a half years. When it first went on the market, its price was zero. Right? When it first started trading, its price was zero. You know how much it cost before it started trading on exchanges? It cost nothing. All you had to do was mine it, pay for the electricity for mining it. And you got 50 Bitcoin for every block. How different would your life be right now if you had blocked if you had mined a block of Bitcoin and somehow secured them for all these years and just never touched them, and realize that right now at $60,000 or so per coin, even at $50,000 or $40,000 per coin, you had 50 times 40,000. How different would your life be? That was a free asset 15 years ago. Free, as in zero money. Yes, you had to pay for the electricity. I know. I used to do this. Way back in the day, when Bitcoin was free, and the asset cost nothing, which is kind of amazing. But it ain't free no more, right? Why is it not free? Well, because the asset has been determined to have more value than $0.00. Why? Because it's extremely rare. There's only 21 million of them. It's not enough to satisfy, even 0.1% of the people on the planet to have an entire one. It's not even enough to satisfy a third of all the millionaires and billionaires on the planet to have even one. And 91% of them are already owned by some 13,500 people. They own 91% of all of it. So the remaining 9% or 8.5% that remains, 6% of that or 5.5% of that has yet to be mined. So nobody owns it yet. And the other 3% is owned by retail or people who don't have 100 of them or more. They could be super fabulous people, super fabulously wealthy people who just haven't managed to buy 100 of them for whatever reason. They just haven't bought 100 of them. Right? But whales own most of them. What? don't know what you're saying there, Pinky from Friday, but anyway, keep it wholesome, bro. So anyway, back to the beginning of this. So that's why I believe that assets that start at zero have an inherently higher chance or probability of finding their real value to the upside over time than assets that artificially start at some random number that somebody picks for whatever reason. Now, again, I know there's plenty of stocks that don't, 99.9999, in fact, percent of stocks, even more, don't start at zero. They don't want to start at zero, all right? They want to say this thing has a certain value, and that's what we put it at, and that's fine. And it may well be that it has a recognizable value, which is above zero. It may well, in many cases, maybe even in most cases, okay? But it has been demonstrated that the power of starting at zero is, in fact, puissant, right? It is very puissant, as we say in French, very powerful. Why? Because when you let the market determine your real value, you're basically coming undressed to the party and saying, hey, I am willing to take the risk that says, pardon me for 1 minute, that says that there is in fact a value that just happens to be starting at zero. My favorite Disney movie is The Hunchback of Notre Dame, says Snapshot Sniper. I love a hero with a twisted backstory. Okay, Snapshot Sniper. Thanks for letting us know. Actually, yeah, Hunchback of Notre Dame is a pretty cool story. And nobody was necessarily fully aware of the story arc formula that is so common to them and that Disney based. Pretty much every other big storyteller. So we're going to use that as every one of the stories, and then decided to edit it up. Those arc and all that kind of stuff. How we sell stuff. The most thick. It was a man named George Lucas in a movie called Star Wars. Right, if it wasn't for that random use of the story arc concept, which he had read about, didn't invent it, that's for sure. He just realized, oh yeah, somebody has already synthesized this entire field of study to recognize that there is a pattern to telling stories. And what was he telling? He was telling a fairy tale. Star Wars is a fairy tale. I know I'm off on a tangent here, but Star Wars is a fairy tale if you look at it. It happens to be a science fiction-based fairy tale, but it is a fairy tale. It has every element you could possibly think about for a fairy tale, right? It's got an evil emperor that you only meet later on. You don't meet him right away. It's got an evil lieutenant who works for the emperor. Who's not a lieutenant. He's a commander, Dark Lord of the Sith, Darth Vader guy, right? He seems like the evil leader when you first watch Star Wars because he's the leader of the bad guys. They don't mention an emperor in the original Star Wars movie, right? It's got a good guy, Luke Skywalker, who's like the protagonist hero who saves the day. Well, what does he save? He saves the universe from the evil empire, right? And there's a princess, right? And Luke eventually, saves her, right, from the evil guy. And you think essentially that Luke gets the girl, but only to find out in later episodes, probably not, because they're related. So they don't really get together, even though. Anyway, that part of the story is always a bit weird. Han Solo, right, the daring hero who helps the protagonist achieve his mission, even though he does it in ways that are not always following the rules 100%, and his sidekick, who's a lovable furry creature, who's basically like a big giant with a big heart, who puts himself in harm's way to protect others. Chewbacca, the Wookiee, right? You got all these other NPCs, or they're not really NPCs, but they're alternative or additional stars. You got the robot that talks a gazillion languages, who's basically there to help be the interlocutor between the parties, kind of like the ultimate diplomat. You've got the messenger, right, who carries a message from the princess to the Jedi. That's R2-D2, in case you forgot. Right, who carries a message for Obi-Wan Kenobi to know. So anyway, the point is, Star Wars has all the elements character-wise and character development, story, plot, location, right? Everything. All these different things. It's a fairy tale. And if it wasn't for George Lucas using that story arc concept, the story arc concept as a concept would not have been popularized by that series. It might have been popularized by something else, but that series guaranteed that it would happen because that series became a massive blockbuster success, right? I mean, they're literally, when they say blockbuster, just so you know, in case you're a millennial, what is a blockbuster movie? Do you know? Right? The term blockbuster movie, fun fact, comes from the fact that when people would be excited about watching a new movie, much like people are excited to go to a concert of their favorite popular artist or whatever today, or just bands they want to see, people would line up for hours and hours and sometimes days in lines that would literally wind around the entire block of the city city block where the movie theater was. And sometimes they go around the block and then they'd start on the next block and the next block and the next block. Be huge lines. Tens of thousands of people would be waiting in line to see these movies. That's what a blockbuster movie is. People waiting in line to get tickets for some time in the future where they might be able to, see the movie they want if they're lucky at the premiere, like if they're extremely lucky, or if they're not quite as lucky, but still lucky to get to see it in any of the showings after it first shows. And to watch the actual premiere in any given theater used to be a big deal. Like, oh, I'm going to the premiere at the, whatever, the Lowe's movie theater, or wherever people would go. The AMC or something. So why do I even mention that? I mention that because that was also a way, well, because first of all, because you mentioned your movies stuff, the Notre Dame thing. But it relates to the market. How does it relate to the market? Blockbuster movies are a very good indication that you've made a movie that is popular with the masses. And those people have determined the value of that movie by whether or not they agree to pay the nominal ticket price at the movie to spend anywhere from, an hour to 3 hours of their life watching your movie, typically 90 minutes or thereabouts, right? Like 92 minutes, 94 minutes, sometimes 89 or whatever. About an hour and a half is typically the length of a full featured movie in Hollywood. And there's all kinds of reasons for why it's 90 minutes, by the way, right? It's not by accident. So, that relates to market prices, because if the market doesn't agree that your movie is worth watching, they're not going to go. And if they think maybe it's worth watching, but I don't want to pay $9 and stand for 3 hours to wait in line to see the premiere, or I don't even want to go after it's premiered, and it's still running in movies 3 weeks later or 2 months later. I don't even want to go see that when I can just walk right up to the ticket counter and get a ticket, or order the ticket online and just go to the movie. I'd rather just wait till it comes out on cable TV, for those who still watch that, or until I can watch it on my favorite internet streaming service, or until I can, download it on torrent, right? the same day that it comes out. It might be a shaky version, might be partially blocked. You might not get the whole movie, might have other weird audio or video happening, but at least you get to see it, right? Kind of. So that's a thing called market determining prices in the real world. There's movies. And that is a real way to measure the value of a thing. And that is how Hollywood movie studios literally determine the returns on investment of their movies, right? Ticket sales are going up from the start of the movie, and how long will they keep spiking? When will they? So right now the tickets are distributing away from the mean, which starts at 0 when it's the very beginning. Once the distribution is done, will the mean reversion of the returns go back to 0? Or will they continue, will they go down maybe a bit and then back up? How long will this movie be running in the movies before the ticket sales effectively run to zero? Because at some point, the movie theaters have to make room for the next movies that will sell more tickets. And so they can't just keep the old movies in their stock forever, like in their ongoing movie shows forever, because they have to change their roster of what they're showing. Otherwise, people will stop going to the movie theater if they've already seen what they're showing. If 90% of the people that go to movie theaters have already seen everything they're showing, they're not going to keep those movies around for the other 10% forever, who will probably never go see those movies anyway. Otherwise, they would have gone before. And it's the same thing with digital assets on exchanges, right? Or any asset. How long is an exchange going to keep an asset on an exchange if no one's trading it? Just like the CME with the Bitcoin futures. How long did they require you to invest 5 Bitcoin to trade Bitcoin futures on the CMEs? What was that? It was like 6 years, right? From the end of 2017, right? November 2017, the day of the $20,000 all-time high on Bitcoin, until like what, last week, 2024? So we're talking so basically from 2018 until 2024, it's like 6 years, right? Not a very long time, but certainly longer than many assets in the markets, but not a very significant amount of time. Let's put it that way. Eventually, exchanges that see that the assets that they're offering aren't making a difference are going to remove those assets because they need people to be trading those assets. And if nobody is, then they're going to replace them with assets that people are going to trade. They can also choose to keep them and just put them very low and basically out of the way, and only really people who really want to trade those things are going to go find them. But they still have to manage those assets, right? So if they have to manage those assets that basically no one's trading, and they're not making enough money on the fees to justify sticking even a junior asset manager on those assets, then they're not going to. Right? They're going to pull those assets. Think about it. Would you pay somebody a full-time salary to manage an asset that gets like $200 a day in volume? Because you got to pay the fees, you got to manage the asset, you got to fulfill compliance, you got to make sure that everything is properly working. If there's any customer complaints from the 2 people who are still trading it, it's not worth it, right? You got to make money if you're an exchange. You got to make a lot of money to pay for all the bills. It's not cheap to run an exchange with servers and lawyers and God knows what else, right? It's quite expensive. So that is one of the things they do in part of their selection process in terms of what assets they actually run. right? They have to see what the cost is and whether they can justify that cost to keep letting people trade those assets. If they can't, then they don't. And guess what information these exchanges are using? Do you think they're drawing triangles on their chart to see if a price of an asset that they're offering is going to go up or down? Or do you think they're looking at the returns of investments? They're looking at the returns on investments. How do they determine the returns on investments? By measuring the returns on investments. You can measure that. The percentages, right? They can look at, okay, we invested this much to promote this thing. How much have we made? What is the return on investment? How much have we spent? What is the net profit minus the net cost, right? All the things added up on the plus side and the minus side. What do you end up with? Do you end up with a net gain or a net loss? Do you end up with a net profit or a net loss? What is your P and L? It really is, what is your P or L, right? Because what is the sum total of your P and your L, your profit and your loss? It will either be a P or an L, a profit or a loss, right? What's shocking is that a lot of people who trade don't even know that's P and L stands for. But it does. All right, guys, I'm going to get going, and I hope you all have a wonderful day trading the VEPS. If you want to know, by the way, let me just say, because in case you don't know, today's central daily range on Bitcoin, I'll just let you know right now, because you may as well know. Today's central daily range on Bitcoin is 0.16% of the height of the asset's value, right? It's like it is really tight. It is super tight. So 0.16% of the asset's value, like $90 or something like that. Out of a $58,000 asset, 0.16% is the height of the central daily range. What does that mean? Well, first of all, it means it is probably going to be a trending day on the 15-minute. You can see already that there's been a trending move. It's happening right now. Probably going to be more trending moves today on the 15-minute. And obviously there's lower time frames where you'll see more trending moves. But it's already having a trending move since like the last hour. Or 45 minutes or whatever hour. And that's on the 15-minute. Again, on the super low time frames even more. And it's already tested the central daily range. It tested it at the start of the day, tapped right to the top and then fell right down. Went to the bottom of the central weekly range and bounced right up from there. And went right back through after testing to the center of the weekly range, walked over a little bit, then moved up again further to test again the central daily range, and has gone above it now. And it's moved above this monthly level, which is the top of the central monthly range. And it's now moving above that towards the 4-hour normal distribution target above and towards possibly the top of the central weekly range. All that is to say, there is likely to be a whole bunch of scalping action available on low time frame trades. And that's it. If you like what you learn about the VEPS and how to trade the VEPS, and you want to know more about how to trade the VEPS, remember you can always get the free volatility starter kit from Alpha Trading. Just go to the Alpha Trading Discord. It's at alphatradinghq.com/Discord. Again, that's alphatradinghq.com/Discord. And go to the request support channel, click on create a ticket. And once you do that, just say you want the access to you just say you want the volatility starter kit, and make sure you let us know your TradingView username so that we can get you access, because obviously we need to know who to give the access to. And then that's it. You just the username, nothing else, no other information is fine. And then you'll get all the information you need to learn how to trade with those tools. And you get access to the live chat. You can join the live streams that start Monday through Friday at 9 a.m. Eastern time. You can access chat with real VEPS traders who talk about trading the VEPS. You can ask all the questions you want. The more the merrier, because if you're thinking about a question, I guarantee you someone else is thinking about it too. You get all the educational information. You get the authoritative book about how to trade the VEPS, written by yours truly and other contributors from the alpha trading community. Shout out to Andy and to Matt and to Bilbo and to Van F and to Donnie, my most excellent co-founders of alpha trading. We are a small but amazing group of people, and you will find very friendly traders who are happy to help you actually learn to trade for free. We don't want your money. We don't sell you a course. We don't sell you psychology courses or nonsense. We give you free information and free tools for you to learn. We show you how to learn it. We give you a cheat sheet you can learn from, which is quite simple to learn. And then you can see for yourself that even the free tools work incredibly well. And when you see that the free tools are working incredibly well, if you want to try the not free tools, you can try them for free, right? But only after you actually know how to trade with the free tools. If you don't know how to trade with the free tools, we won't even give you access to the free trial of the not free tools, because we don't care to sell you the indicators. That's not what we're here for. Like, if you're actually a serious trader, then it will be a no-brainer to you, once you've learned how to use our free tools, that you need access to the pro tools. But even so, you would still try them for free, because we give a free trial for a couple of weeks, and you can see for yourself that it's working. By the way, as I've been speaking on this 15-minute candle, literally right now, what did I say? Bitcoin was heading up towards the top of the central weekly range. Guess what it just did? Like right now, it just hit the top of the central weekly range. Again, I'm not reading a crystal ball here. I'm just looking at the VEPS. It's incredibly powerful stuff. There's a reason we use it, right? It just hammered it, punched above. And let's see now if it will stay right here, which happens to also be a Laplace, a 4-hour Laplace level, or will it come back down? But the trending move is still going strong. So, and variance is rising, possibly correlated on the 15-minute. There is a normal distribution target firmly above. There's a reverse wave trend not far above here at 58.7, but right now it breached that 58.6K top of the central weekly range. So let's see if it gets to that reverse wave trend at 58.768, and or maybe to the 59 carry area, the 59.1. There's a that's where there's a 4-hour normal distribution target there, and they're also just above that. There is a VRE daily level right there, which is the first VRE sell level on the daily. You can call that the resistance line if you want, at 59.1K. But it's a sell level. There's only buy pressure and sell pressure. So we know that that's the sell pressure area. We don't magically draw these lines on the chart. They mathematically get put there based on information that creates the volatility range estimator. It's not a random price number that we pick. Right? It's actually based on the volatility and the ranges of it, which means we know where the liquidity is. If you know where the liquidity is, you know where the money is. If you know where the money is and you know the direction of the mean or the reverse mean, and we know both of those things, and we know the future direction of the reverse mean too, which is even more badass than you can imagine, then we have a pretty good idea. By the way, what did I tell you? That the reverse wave trend target was next? Guess what it just did? It hit the reverse wave trend target. Now let's see if it can continue, as it is continuing on the entropy. Let me see if I can reverse this thing for you just so you can see. Here. I started telling you about the price action right around here. Okay, it was going up here. This candle, it went up. And I told you, look, let's see if it's going to go up to this normal distribution target and possibly this top of the central weekly range. Well, look what it did on this candle. It literally hit that. And then it hit this little alpha 4 level Laplace level. And then what did it do? It went up to this reverse wave trend level right here. Look how it hit it and then found sell pressure there. Now, can it go up to this normal distribution line and possibly this first daily sell level that I was just telling you about of the VRE? It certainly can. Does it have to? Well, there's the entropy indication. That's a trending move. That's a trending move. Direction predictor on is telling you it's going to the upside and it's positively correlated, and the correlation is increasing and expanding. Positive correlation, increasing and expanding. If you're wondering, why do I have 2 entropy indicators? I like the different versions for different reasons. That is a fat tail outlier to the upside on variance right there. That is a positively correlated fat tail outlier, meaning it's above the 2nd standard deviation line. And that right there is above the 3rd standard deviation line of variance, which is the data around the mean. What is data around the mean? It's another way to say volatility. Here's the future of the reverse means of log returns set to different lengths. So we know where the reverse means are going. There is your VRE chart telling you where the targets are. What did I say? Let's see if it finds some sell pressure at the reverse wave trend before it decides to go back up. What did it do? It found sell pressure before it decides to go back up. Let's see if the entropy indicator tells us that the trend is ending, right? Let's see if there's any divergence. No, the only divergence we have that is playing out right now is the hidden bull divergence. That's the divergence that we have. And it played out very nicely, didn't it? Literally on this candle, the asset went up, you know, more than 0.5%, right? Because then it fell back down quite a bit. So let's see, what did it go up? Yep, 0.62%. And then it came back down. Now it's at 0.4%, 0.46%, right? And what did I say? Let's see if it comes back down again before finding more buy pressure. Well, it's playing out this hidden bull indicator right here on the reverse, on the returns oscillator. Right? That is a very powerful indicator. It shows you actual divergences between the returns. This is the returns oscillator. So it's showing you how much the returns are. Right? Are they positive or are they negative? Positive is up here above this line. Negative is below the line. It could be negative and falling, negative and rising. It could be, and the colors in the background are correlations. Are the correlations positive or are they negative? And you've got top side, I use the top side for the smooth correlations and the bottom side for the unsmooth correlation. I use the thicker, more visible line here for the unsmooth returns, and I use the thinner, wispier line for the smooth returns. And to be honest, I generally trade the unsmooth returns because I'm scalping most of the time. This 15-day track, this 15-minute track that you're looking at, 15-minute time frame, is actually quite a high time frame for me. Here's the time frame I like to look at the most. The 1 minute. Look at that. We had that little trending move, and now it's fading. In sell mode, we had that nice little massive move on the variance. Big fat tail outlier, and now it faded. It's still a fat tail outlier, though, technically. It is still above the 2nd standard deviation. And it is rising again, which means the asset could go up again. If you're wondering, gosh, why don't you jump into this trade right now? The asset will always give you occurrences of opportunity. It doesn't matter if you're in this trade right now or if another one in 10 minutes. Look, even you think back here, you didn't have a trade? You think that was not tradable? Really? These 3 candles, you think they weren't tradable? You think these 4 candles, you think they weren't tradable? They went from the top of the central daily range down to the reverse wave trend where the returns diminished, the negative returns diminished to a point where it was like, all right, take your profit. And then from there, it gave you the opportunity, once you saw the indication was rising again, gave you the opportunity on a trending move, by the way, to go back to the upside. And if you were a nutter butter, this was right before the trending move began. The trending move began, the next trending move began right here. just as it tapped above the center of the daily range. Literally right there. That's where it began. Okay. So you could have taken your time, had your coffee, whatever, come back, looked at the entropy indicator. Look, right there. Right there. Where the horizontal, the vertical dotted line is. That's where the beginning of that entropy move was. Right? Even a candle before, technically. But that's the slower one that I use there as a confirmation. And you want, there, I'll show you. Yeah, what did I say? Right there. Look at that. Look at that. What did I say? A candle before? Candle before, baby. There's a reason I use it. There's a reason I use the different indicators here. And because I keep them on different settings. Yes, of course, I could move this one back. I could pull this one back by a candle. But I leave it as a confirmation, the candle later, quote unquote, than this one. This one I use to, quote unquote, front run, to not miss the moves. And then the other one I use as confirmation. Because again, I'm trading on the 1 minute, so I get that confirmation pretty quickly. If I was trading higher time frames, I really wouldn't use it or need it. I just like to have that confirmation on the 1 minute. And that's it. So you can see here on the 1 minute, what did it do? It went through that trending move. Right? It faded just a little bit and then kept going up and then faded a little bit more and then kept becoming a bigger trending move before it faded out. Well, again, look at it on the VRE chart. Right? Literally going up and down, hitting all the targets along the way. And that's the 1 minute. That's the 1 minute VRE chart where I'm putting, these aren't 4-hour Laplace levels. These are 15-minute Laplace levels and 15-minute normal distribution levels I have in here. And a, 5-minute RWT. And a 1 minute RWT. Yes, I still have the daily levels and the central and the weekly levels and the monthly levels of the VRE. And I still have the 4 hours of the Laplace. There's a 4-hour Laplace right here. And here's a 4-hour normal distribution. Why do I do that? I do that. I want you to guess. Why do I do that? I do that because by doing that, guess what happens? I see more levels to scalp at. That's why. That's right. I can see more levels by using the lower levels. Now, do I need to hit specific lower time frame levels to take the profit, or if there's a higher time frame one along the way, do I take the profit there? You want to guess? Can you guess? The answer is, of course, I take whatever bands are hit first that I want to take profit on. Right, now you can see that the 15-minute normals are back on there. Of course, I don't sit around and wait if I'm in a trade already more than a few minutes or 10 minutes. Yes, if the VEPS is telling me to stay in, I'm going to stay in. Look here, okay? Here, when the asset was moving up, here, okay, and the trending move was on here. Do you think I'm getting out here while everything is still rising? No, I'm going to wait for the entropy trending move to end when it's a significant move like that. But I'm going to look at whether or not I hit a target. So am I going to take the target out at the very top here? No, I would have gotten out at this normal distribution level. Okay, maybe I would have waited a candle to the top, but then the next candle would have started coming down. And I might as well have gotten out here. Because if I would not have taken this candle as profit, then I just wasted a minute plus just to get back down to here. And for all you know, I took the profit out when it dipped down to here. I'd rather take the profit out when it's closer to the top of this candle, even if it's halfway, I don't care. But, closer to the top of this candle and miss this last candle. Why? This last candle didn't go up. That it went up 0.09%. But it wasn't like earth-shattering gains. right? So those are things to bear in mind when you're trading, when you're scalping. Right? Don't miss profits just because you're greedy and you know it's going up. It's going to keep going up. It's going to keep going up. Look, it's making the move now. It's making the God candle. No, it's not. That's not a thing. What do you think is going to happen when Bitcoin's at $100,000 or more? You think it's never going to have a $10,000 candle? It is. Most probably. And you know what? That won't be your God candle either. That would be a 10% move. You think there aren't 10% moves in Bitcoin right now? There are, and they're not called God candles. They're just called 10% moves. People professing this mythical idea that Bitcoin is going to have a God candle and the whole world will change and everybody will be gazillionaires. How do I put this nicely? They're lying to you. They're doing it to pump their bags. They're doing it to scare you, and they're doing it to FOMO you. And generally speaking, it's working. If you don't believe me, look at the amount of people getting liquidated every day on the crypto charts, on CoinGlass, etc. All right? It is insane how many people every day are getting wrecked because they take over-leveraged positions, because they trade positions they can't afford to lose, and because they don't follow the 3 rules of trading. What are the 3 rules of trading? If I need to remind you, well, I will. Rule number 1, take your profits early and often. Rule number 2, limit your loss. Rule number 3, don't be emotionally attached to your trades. It's that simple. By the way, remember when it hit that weekly and then it went a little bit above on the 15-minute chart we were looking at, and I say, let's see if it loses some steam before it finds some more buy pressure? What has it been doing then? Losing steam, finding a bit of support, losing steam. Now look where it is. It's at a 15-minute distribution, a normal distribution level, where it's saying, take your profit on this short. Take your profit on this short, because it could go up again. What's it doing right now? It's going up again. For now. It's on a random walk, positively correlated. So it could go to the upside. And look, it's going to the upside. Has quite a bit of work to do. But for now, that scalp is good. No div playing out on the 1 minute right now. No div. The hidden bull already started a good number of minutes ago. You could say, well, all right, well, it's still playing out. Yeah, you could say that. You know, yes, on entropy and on returns oscillator, by the way. And entropy gave you the move a candle ahead. That's the entropy oscillator right there. Right there. That's the entropy oscillator. And you see hidden bull playing out. And hidden bull on the price action playing out since here. So that's when it started to play out, and now it's playing out and is literally back to where it began to play out on this candle right here. It's actually above, right? To start on this candle, so now it's above it. So you could say the hidden bull is playing out. And on this one, on the returns oscillator, it gave you the move from the next candle. So in both cases, a good place if you know how to read this information and actually trade upon it. But now on the short length returns oscillator, you can see there's bull div playing out. And what's the asset doing? I'm sorry, bear div playing out. That's the red line right there. The asset is, for now, coming down. Not a surprise, because the returns oscillator gives you incredibly good information regarding the divs. The returns are falling. Yes, the correlation is negative, but the slope of the correlation is rising towards the mean.
What does that tell you? Well, a negative and a positive equals a negative in that sense. And the candle came down. And the direction predictor on the entropy oscillator shifted from buy to sell. Right there, you can see it. That little pink line that goes like that around the entropy indicator. Right? It was blue until that last candle started rising. And now it's shifted to pink, which means sell. And the asset is coming down. And we've got the bear div that played out. And now you've got bear div on the entropy oscillator. So that could come down further. And again, you're at the normal distribution line. What did I tell you? That's the take profit area on the short. This is a little pump from the normal distribution to the weekly area right here, the weekly level. Right? You see it? You see that weekly level? That's the top of the central weekly range. How do you know? See that yellow one right there, the yellow line with the circles? That's the center of the central weekly range. That's the bottom right there of the central weekly range. Bottom, center, and top. See, they're the same size. Right? That's what makes that the center. These levels around it are equal distance from it, from top and bottom. Just like this blue and yellow cross line, that's your center of the monthly range. And this area, that's the bottom of the central monthly range. So bottom of the central monthly, center of the central monthly, top of the central monthly, top of the central monthly range. And look, again, equal height. Wow, amazing. I know, right? And here is the central daily range. Bottom of the central daily range, center of the central daily range, top of the central daily range. And I think it's kind of obvious. You can just see that the height is equidistant from the center. All right, folks, that's going to do it for now. Orange hair equals the next 4 years. Okay, great. Orange coin equals the next 200 years of financial asset management. But so does Litecoin. And I highly recommend people looking into Litecoin and learning about it and seeing why I consider it to be of exceptional value and highly undervalued, in my opinion. Because, oh, look at this. A giant furball. Hello, giant furball. I found a giant furball doing silly things in places he shouldn't be because, well, he's a giant furball. Yes, I have a very large dog. No, actually, I have a giant dog, not a very large dog. Yeah, Litecoin, highly undervalued in my opinion. There's only 4 times as many Litecoins as there are Bitcoins. I don't know of an orange hair equivalent of Litecoin. Is there an orange hair? Orange hair equals the next 4 years. Maybe orange hair equals the next 4 years. Maybe. By the way, look at the assets. Bitcoin has come right back down to that reverse wave trend. Isn't that beautiful? You want to see what happens with the reverse wave trend? Look, the reverse wave trend can tell you the direction because the reverse wave trend is rising and the wave trend oscillator is falling and now below the mean. Guess what that is indicating? Further price go down. Look at the direction predictors indicating. Further price go down on negative correlation of entropy. Look at the direction predictor in the RMLRs are telling you. Down, baby, down. Entropy oscillator is saying down. Returns oscillator on the regular length. Returns are quite low. So is a correlation. And even on those shorter length, you're getting positively correlated returns that are basically flat. You do have a bit of a bull div that played out. It started to play out possibly in the last candle, but went flat. And the price action is in fact dipping as the wave trend oscillator and direction predictors and entropy and variance are indicating, look, variance is negatively correlated and rising. That's a fat tail. Very close to a fat tail. Not quite. Let's see. What is it at? Yeah, it was very close, but not quite. And now it is falling, positively correlated, which again is saying price go down. I'm showing you this to, let's see if the correlation will break on that. Or if random walk will give us a move to the upside. Because right now that is a random walk, and that is a random walk. The asset is on a random walk. What happens on a random walk? A lot of randomness happens on a random walk. So it can go up or down essentially randomly because the asset price is moving randomly, right? Yes, the price action is following the returns most of the time, but you clearly can have times when it doesn't. But here it's saying bull div on this returns oscillator. What's the asset doing? The asset's rising on the bull div. And the direction predictor is saying up. And this one is saying up as well. Anyway, that's going to do it for now, kids. Did I say kids? Men and women, traders of the world. I hope you all have a great day, and see you guys in the Alpha Trading Discord, and see you hopefully in the live stream. Again, starts at 9 a.m. Monday through Friday, U.S. Eastern Time. 9 a.m. U.S. Eastern Time. And that'll be it for now. So if you want to join us, once again, just go to alphatradinghq.com/Discord. Get your free volatility starter kit if you don't already have it. Come learn to trade the VEPS. Ask as many questions as you like. We're not here to teach 10,000 million gazillion people garbage. We're here to help one trader at a time learn a better way to trade. That's it. We could care less if you buy any of our tools. We could care less if you use our way of trading. But just know that if you don't, and you're trading this stuff, there's a high chance, a very high probability, you are trading against a robot or a person that does use this information and has a consistently high winning rate. Okay, that's it. Cheers.